Our next guest petitioning for the same in a Wall Street Journal report earlier this month, saying quarterly results are, quote, overly burdensome. Long-term stock exchange CEO Bill Hartz joins us now. You've been leading the debate on this, Bill. First of all, what is long-term stock exchange? We know about the New York Stock Exchange, where we are, and the NASDAQ, where these companies are listed. Where do you come in?
Well, thanks for having me on, first of all. So the long-term stock exchange is a registered national market system exchange, just like NASDAQ and the New York Stock Exchange. We're a little bit smaller than they are, but we also list companies, and our mission really is to advocate for long-term investors as well as long-term companies that want to differentiate themselves from other companies.
And what do you mean long-term companies? I mean, every company, I would argue, and their CEOs should be thinking about the short term and the long term.
Of course they should. We look at that through a variety of different lenses. For example, maybe companies that spend more on research and development might, be planning more for the future and so on. There are a lot of different ways to look at that. Our mission, again, is to let companies differentiate themselves that way. We don't particularly ask them or force them to commit to any particular metrics.
So how have you been engaging on this subject about quarterly earnings? Have you been in touch with the White House? Were you surprised to see the president come out in favor of what you've been advocating for?
Well, of course, we're pleased that the president agrees with our position. And I would just point out, we don't look at this as a political thing in particular. We've heard from Democrats as well as Republicans that are in agreement with this. Maybe it's one of the few things that Democrats and Republicans do agree on. But what we're doing is asking the SEC to change the rules to allow companies to optionally report biannually. And what we're trying to do here is balance the needs of investors with the ability of managers to efficiently run their companies. And in the end, what we hope is that this will lead to more companies going public. There's a real problem with companies deciding to stay private, in part because of the requirements of rules like quarterly reporting.
Although we're having our best quarter for IPOs, Bill, since Q1 of 22. Isn't it kind of hard to argue right now that people have a problem with going public?
Fair enough. But of course, we don't just look at the last quarter. I think you need to look at the trend over 5, 10, 15 years. And even if there's an uptick in the latest quarter, we really need to think about what's going to happen in the future and what is it that's causing companies to stay private. How can we encourage them to be listed on public exchanges?
Do you think that, let's game it out, say you have a minimum biannual requirement, other companies might opt to be more communicative. Do you think those companies that disclose more with higher frequency get a premium, or would the companies that don't and focus more in the long term get a premium?
It's a great point. I think it should be up to the company. Markets shouldn't be one size fits all. If a company feels that more reporting is warranted, then they should be able to do that. And that's why we've tried to make this optional. Other companies, and we think there are a lot of companies that may decide that, no, biannual is enough for them to convey how they're doing. I think that in the end, the analyst community and high quality information channels like CNBC will hold companies' feet to the fire if they think they need more information.